at UBS Wealth Management. What do you guys do on days like today?
Well, that is a great question. And what's so great about this show, a worldwide exchange, gets at what we do. So first thing in my day is get on the phone with Asia, what's going on and what we're seeing in the markets and with clients and what we know about the situation. So let me try to give you a quick rundown. First, one of the things we do highlight in our year ahead, and it's certainly bearing itself out today to a degree with our clients in Asia, is, we have very sophisticated clients. They do have liquidity plans. They have asset allocation plans with us. And so many of them are looking for, what are the buying opportunities at a time when, if you wanted to see a headline out of some place, have a reaction in the market like this, the fact that it came out on Thanksgiving, it couldn't have a more special timing.
Yeah, and I think that's an important point that you are making. Obviously, much of the world does not celebrate Thanksgiving, but we know, and I'm not trying to be jingoistic here, that the United States sort of leads global trading in many ways. Most markets, desks here in the United States are going to be thinly staffed. If they're staffed, it's going to be probably more junior people. Nobody's going to be waiting around is my point. Correct, Mark? They're not going to be sitting and trying to analyze where this variant may go. It is, let's sell what we've sold in the past, and we've had scares like this in the past, and we'll come back in Monday and revisit it after we've thought about it over the weekend, right? That's why we're seeing airlines and cruise lines and hotels down 6, 7, 10%.
Well, you say people on the desk. We know the machines are on the desk, and as you said, they're running the program, and so we need to assess this. So just a couple, you summarized very well what is known about this having more proteins that could impact how this reacts with the vaccines that are out there. If you look at the empirical data of the infection rate in South Africa, for example, it's actually not spiked up. It's lower than it's probably been since the beginning of the crisis. So that's on the one hand. On the other hand, that this variant is taking up, of those smaller number of cases, this variant is taking up a larger proportion of them. And we also know that since it's going to be a while before the scientists can really make a determination, we're going to be in a little bit of a limbo here around this. So that fits with the environment that you've described.
Yeah, and let's, Mark, I want to, you came on so graciously so early and on a Friday morning. I want to ask you why you're here, because of the reason that we asked you to come on, your global outlook as well. Let's hope that this turns out to be a scare. The vaccines are effective. Maybe it doesn't go anywhere. We'll find out. Japan, Europe, and U.S. midcaps, all things remaining the same as they were yesterday. Those are some of your top ideas for next year, correct?
Well, I actually think whenever you have a year ahead report, right, you hope it lasts for a couple of days, right, before you have to start tweaking. But, I would say, headlines aside, I think a lot of these trades still make sense, or all of them make sense, because one of the things we said is we do think you're going to get a continuation of this reflation trade through the first half of the year, and then things are going to normalize in the second half of the year, both the growth and inflation rates. And so for the first half of the year, as you said, we're looking towards Japan, we're looking towards Europe, we're looking towards energy, and that cyclical trade. But then in the second half of the year, we think that healthcare, which right now is trading at very favorable valuations compared to history, but also has that growth component, is the area we'd be looking for more defensive stock plays. So for some people, that's going to accelerate a little bit when they hear headlines like this.